Okay. I suppose we might as well start. Waiting for Alex, but I'm here with Jesse. Everyone, welcome to today's Friday Fix with myself and the awesome guys at Alpha Picks. Well, Guy, our awesome Guy at the moment. Just Jesse, me and Jesse. It is, what is it, Friday, March the 27th. As usual, myself and the Alpha Picks team will be going through the major topics and themes of the week, what to keep an eye on. Normally a couple of rants are thrown in, maybe a bit of a stat attack from Alex when he appears. Yeah, obviously, again, as always, nothing discussed on the podcast is trading or investment advice. They're linked for a reason. There are swear words thrown in occasionally, or quite fucking often. And Alex has joined us. And Alex, can I just say that, you're via the interweb, and we finally got Jesse out of the Little Chef Cafe toilets, and he's sitting next to me.
Into the Stafford.
Into the Stafford toilet.
He's alive and well.
You're sounding better than you did earlier, my friend.
Yeah, no, I'm a little bit rough. Not gonna lie. I think it's just a concoction of
Hangover.
a few things, but it serves to epitomise the work ethic of the PIQ and the AP research team that we still deliver. We still deliver for our clients and our fans, even when we're not feeling on top form.
Yeah, so Mum, if you're listening, we do all.
yeah. Thanks for sharing love. That's the continued support.
Yeah.
But I wanted to talk about a few bits this week. Obviously, the obvious ones and some unobvious ones, and one sobering thought actually.
Oh,
at the end,
God.
which we'll come to. The first one I want to talk about, the main one, is obviously the situation in Iran, which is ongoing. And the slant I wanted to take this week, you might have seen it yesterday. The OECD updated their inflation projections for this year. And effectively, they're the first sort of agency that are starting to factor in the higher energy costs into passing through into inflation.
Yeah.
And we struggled here, didn't we? I don't know if you saw it. The UK had one of the largest pass-through impacts. They upgraded our year-end inflation forecast by 1.5% to 4% for the end of this year, which is only marginally being beaten by the US at 4.2 and India at 5.1. So, yeah, why don't we start there about the likely inflationary problem that the UK is likely going to face later this year?
My concern with this is that it reminds me somewhat of German economic downgrades. It's like, take last year, for instance, every 2 months or every month, the industry bodies would downgrade German GDP by another 0.1%. I think we're going to see something similar here, whereas this OECD inflation expectations. I hope that's you pouring out a lemsip and not going for a wee, Alex. But
It is.
I was like, oh my God.
Orange juice.
But get on the lemsip. Get Luke Said in here. But my concern is that this projection is based on pretty much if things things don't get any worse. Now, I think when this drags out, we've got to factor in that Qatar have already put kind of force majeure. Well, they've kind of force majeure all loadings from May up to May, but they've also said basically any new orders coming in, we ain't filling you for another 5 years on the LNG front. So I do get the impression that this first stab at a projection is probably the lowest projection in terms of inflation we're going to see from them, unless things somehow magically fix themselves. But I just can't see it happening. I think we're going to get far worse expectations going down the kind of, in the next weeks and months ahead. Because again, we would all, I think it's very important we make clear no one's pro-war here, but we are trying to factor in from a market standpoint. You need to kind of assume what is going to happen in terms of supply chains and whatnot and predict that. And it's just not going to, it's going to get a lot worse. We're already seeing helium kind of production is kind of really, the lack of, and the supply chain issues there starting to impact tech. We're seeing in the UK, this is just anecdotal evidence from, UK. I've not seen headlines from anywhere else, but I'm assuming there are some. But, the UK are firing up carbon dioxide plants that have been mothballed because, that goes, you need carbon dioxide for a number of industries, such as carbonated drinks and whatnot. Germany are looking to unmothball some sites and whatnot. I think I can't remember where it was, but there's some coal. I think I mentioned it last week that I think a winner will be coal. We're already seeing some like coal plants being unmothballed. These are all going to lead through into inflation. So I do think my base case now is inflation gets a lot worse. But I suppose tying this back in, and I will stop and give Bessie a chance to talk in a second, how does this relate to monetary policy? We said last week, and I was quite adamant on this, the Bank of England raising rates, or the Fed raising rates, or whoever raising rates, does not change the inflation from commodity prices. So I honestly think that they need to just sit on their hands and let this play out. I don't know, Jesse, what you think on this.
I mean, not too many extra thoughts. I was a little bit surprised that the UK was the highest kind of increase from the forecast there rather than Europe, because Europe's kind of the most reliant in the situation with the Middle East.
No, I think that it's mainly because of the energy pass through, right?
Yeah.
And we are fucked energy wise. The UK pays more energy, but the UK pays more for energy anyway. So I think that kind of makes sense.
Okay.
I'm kind of taking a stab here, but I don't know. We need Michael Brown to ask his girlfriend.
Yeah, I mean, not too many other thoughts from what Ryan made. I was looking at it yesterday when the report came out. Yeah, I think you make a good point that it's kind of the first forecast, and if the war drags on, then those are only going to be biased upwards. So
it's the first cut is the cheapest kind of thing.
Yeah, I mean, looking at inflation swaps this week, they kind of came off Monday and were kind of helped with the Trump comments on Tuesday. So they stabilized a little bit, but if this continues, then inflation swaps will go up, which is a better measure than OECD.
But then,
forecasts.
Exactly that, right? But then my question is to you two: do you agree or disagree? It's got to be one or the other. Do you agree or disagree that central banks, is futile for them to kind of try and dictate policy based on something that they whatever they do will not change the price of commodities? What's your
I think I do think that their impact, they will have an impact on it, because it's that even though they're targeting that energy element of it, raising interest rates will help to depress price levels across that basket of goods. So even though it might not be the desired impact, but rate hikes will act to cap inflation, even if the actual energy part of it remains slightly more unconstrained.
Will it though?
I mean, that's what history tells us, Ryan.
But then again, but you say this, but as I said before, since the financial crisis, when there's a gazillion different monetary policy tools and fiscal tools and whatnot, I really don't think interest rates move the dial on inflation anyway. I think it's just a fucking vanity exercise, if I'm being quite honest with you. Okay, let's just make interest rates zero and let the market sort itself out.
Yeah, I mean, that's what I told you. You sound like Erdogan over in Turkey.
I'm not saying I'm a big fan of Trump's thinking, but me, Trump, and Steve Mirren in a room, we're gonna have a barrel of laughs.
Yeah, the only thing I found quite interesting was that the euro area has been raised slightly, but only to 2.6% by year end. So I think you still have that mispricing with the ECB, irrespective of if you think interest rate hikes will help that inflationary pressure or not. At 2.6% by year end, that doesn't scream to me an emergency hike cycle of multiple rate hikes from the ECB. I mean, from the UK's perspective, I think 4%. I mean, it kind of where does that sort of tipping point sit for the Bank of England? I mean, I think at 4%, you could kind of get away with sitting on your hands just about. But I think if you start to see more projections coming through in next month and 2 months after, that starts to get closer to 5 or 6, then I think irrespective, the Bank of England are going to have to act on that.
Right? The Bank of England don't have the tools to help. In my opinion, the Bank of England do not have the tools to help in this specific situation. Who does have the tools? Government, the Treasury, the fucking Department of Energy, or whatever the fucking they're called now. Ed Miliband, God help.
Well, Ed Miliband.
Yeah. My coach for the UK rely on Ed Miliband. That's how it is.
Okay.
This is why I'm living my life waking up crying every morning. Yeah, into me sock. Oh God, Ryan. But yeah,
and that energy duty is the largest proportion of a barrel of oil, the government's duty on it.
Yeah, that's what I mean.
It's like 35% or something. No, so it's like they do. Ed Miliband does have the power to help us out, but I don't.
So what better talk? So define it another way. Same question about the BOE and what impact they can have. Does changing the interest rates move this in commodity-based inflation, or the government policy about reducing any taxation on it, freeing up, getting the North Sea going again. All these other things we could be doing. The government could be doing a lot more to help the commodity inflation aspect than the Bank of England. The Bank of England raising rates will not change the price of oil, will not change the price of gas, electricity, or anything like that. The government could directly reduce the cost of all of the above, and that would help inflation. And this is what I'm getting at. Like, I get traditionally, and it's been kind of fucking brainwashed into thinking that interest rates solve all manners of inflation. They don't. This specific example of inflation, where it's all energy and supply chains, etc. The government have better tools to impact this than the Bank of England, is my opinion. Unfortunately, we're run by a bunch of fucking donkeys, so it's not going to matter anyway.
Do you not also
I'm going for a walk? I'll see you later.
What would you? Yeah. What would you say though? Is that so? They turn around tomorrow, the government, and say, "Okay, yeah, we're going to cut our duty X, Y, Z to help bring the end impact of oil inflation down," but in turn, that's obviously going to cut government receipts by X billions, which is then going to push us further into a fiscal deficit, which then is going to put further pressure on the gilt markets.
What I would say to that is open up North Sea again, and we can get revenue from the energy produced from there. Next question, please.
But that's not a short-term thing.
Well,
you can't open up North Sea oil.
They let it span up in a matter of months. And again, okay. Well, but the problem is though, if we did, the government are already looking to spend billions to help subsidise their own taxation. So rather than subsidising your own taxation, just drop the taxation down. Do I have to think of everything?
What I mean, good to get you on question time.
Giggling away, going, "Oh,
good to get you on question time."
Get me on, man.
I'm just saying, actions have unintended consequences. So I like the idea of cutting the duty, but obviously it's gonna impact things somewhere else, isn't it? And another country that's struggling at the minute is Japan.
Yeah.
For all of our friends and listeners over in Tokyo.
Hi.
Hi. Good to have you with us. Dollar yen hasn't, let me just do a little refresh. It hasn't passed 160 yet, but Japanese bond yields continue to climb because obviously they're a big energy importer, and there's a strong likelihood that many developed nations, they're going to be struggling the most. Now,
it must be said that Japan are basically the best in the world in regards to, bizarrely, they have the largest kind of SPR, strategic petroleum reserves going. I think they've got, when it's full, they've got enough for like 280 odd days. Don't quote me on the exact days, but it's something around that. It's just shy of a year as far as I can remember. So
that's a great stat.
I mean, if it's spot on, then that's perfect. But I know it's nearly a year. This not over punch, right? It's like this. It's nearly a year. But yeah, and the reason they do this is because they know they're an island that don't produce their own.
Yeah.
This is why also they're spinning up nuclear again, which is nice to see. Again, I think Japan is one of those that if this can be resolved and they have significant kind of, deals with sort of Middle East LNG companies. I think it was actually at the start of the year, they were being criticised for overpaying for some contracts for longer dated contracts. And they were like, well, look, we're doing it because we just want the security. Now that's now looking like a blinder unless it's pulled into force majeure. But yeah, I do wonder if people are kind of overemphasizing the potential issues with Japan. I don't think there's in a way they're sitting pretty because they could sell some of their own SPR, some of their own petroleum reserves to others that need it at a considerable markup.
Yeah. Would you like to play where have Japan's bond yields gone?
Absolutely not.
Let's see. No.
Let's go, please.
Give us this.
Yeah, okay. So Japan's, actually we won't start with the 40-year, let's start with the 30. Japan's 30-year is currently paying a yield of 3.7%, which is very high.
Well,
now, can you tell me where...
For Japan.
Yeah, for Japan.
It's very high.
Yeah, an absolute level. Can you tell me where the 30-year was trading a year ago?
I'll let Jesse go first.
2?
I'll sell 2s.
2.5.
Wanker.
It's gone from 2.5 to 3.7.
Oh yeah, massive. Massive.
That is, yeah. The 10-year, the last one. 10-year is now at 2.4%. Can you tell me where the 10-year was
1
a year ago?
I'll go under 1.7 then.
Oh, 1.6.
Ah,
That was a great call. That was a great call.
Ryan's getting the
So yeah, but yeah, yeah. Obviously, well, let's just not quote outright levels. Let's say significant. There's been a significant move higher.
Well, I tell you what, I don't know
bonds.
if you've got the terminal in front of you, but what's the Turkish bonds? Because obviously they're selling gold at the moment.
They are selling gold, aren't they?
Someone put out a really good note on this, by the way. I can't remember who they are. Oh, it was you guys. Oh,
thank you. Jay, do you want to talk through the gold note whilst I put up Turkey's yield curve?
Yeah, so the gold note was really looking at the liquidity side of the gold sell-off, because obviously oil is priced in dollars and people really need oil, and there's a significant lack of it right now.
That's the brain work.
There's been a need for dollars, and one of the fastest growing things and best performing on different sovereign balance sheets has been gold over the past few years. They've been a very notable buyer, increasing their balance sheets. So you've started to see several sovereign nations, especially around the Middle East and those that are more restrained by the oil spike, to start unloading gold reserves.
Also, it's very liquid as well.
Yeah, it is very liquid, easy to sell, and yeah, it's a very healthy size on the balance sheet, and it's done well. So sell what you can.
This is it, exactly that.
The famous adage. So yeah, that's been kind of the short-term driver for gold, which can very much extend. Like if the oil keeps going up, the same market factors are going to be at play, and you're going to have more selling from sovereigns. But I think it's important not to mistake a short-term factor for a long-term fundamental, which in my view still gold towards, say, end of 2026 into 2027 will probably be higher. That would be my bet, that when this all passes over, you'll continue to see those driving factors, which have been very present since 2022, whenever this gold rally started.
Yeah. So, go on. So, I've got a question for both of you, but go on, give us the Turkish yields if you got them out.
Yeah. So the 2 year, so I'll do it versus a month ago, not even need to go a year ago because it's moved so much. The 2 year Turkish yield at the minute is 5.86%. And a month ago, that 2 years at 4.74%. So it's added over 100 basis points in a month in terms of the move higher in Turkey.
A friend of a broker friend of a broker friend is a Turkish swaps broker and rates broker, etc. And this was, I remember going out for a drink with him a few years back, and that was basically when Erdogan was going all reckless and like just changing like interest rates for fun and all this stuff, like all business off. He was saying back then, like their spreads back then were monstrous. Basically, being able to charge whatever they wanted per lot. So God knows what he's up to at the moment. But yeah,
but you need it though, don't you? Do you know what I mean? Not even just to bank profit, but just to manage your risk, like on some of that stuff. Like
they will pay it. But question for you. So this is like we spoke about Turkey. Well, Jay spoke about Turkey. Sorry, Jesse spoke about Turkey and Middle East. I put it to you: would you be surprised to hear over the next couple of months that France, Germany, UK? I wouldn't be surprised the UK at all are starting to look into, or at least starting to making actions, some offloading of their own gold reserves. Because I mean, it's the Labour playbook, right? Sell fucking gold.
Yeah, I mean, I think that Turkey have obviously been unconventional in the past with their fiscal monetary policy and everything in between, which is why you sit so well with their chain of thought that interest rates and inflation are not correlated in the slightest.
But I see what you've done there. I think you just mugged me off, but in a really nice way.
So I would say for more conventional nations, aka Europe and UK, I think I would struggle to see them getting on board that same vibe.
What, really? I mean, even Rachel Reeves and this this Labour government, because they're running out, but they've got no money. They need to fund things to keep the country afloat with like bailouts and whatnot and spinning up stuff. Do you really think it would be unconventional for Rachel Reeves, or at least for some kind of weather balloons to be test balloons, whatever you want to call them, flown to see what the appetite is? Because I can really see Labour, or this Treasury Department at least floating the idea.
Mm.
They have got
The only fact,
to do.
yeah, the only fact I don't know the answer to is like, for example, the relative gold reserve holdings of somewhere like Turkey versus the UK. I mean, do we think the UK holds a similar amount of gold reserve? 'Cause I think that's also something at play. That
Well,
obviously, remember Gordon Brown sold off a load of the.
and this is what I mean. But this is,
Yeah,
I don't, you need to remember politicians only care about their own legacy, right? Gordon Brown sold off a fuck ton of gold. Not only that, but he told the market like fucking weeks beforehand he was going to do it. Yeah, nice one, mate. When Conservatives took over from the last Labour government, the Labour Chancellor of the Exchequer left a note, as tradition is, they'd leave a note for the following Chancellor of the Exchequer, saying, "Good luck, there's no money left." So Labour very obviously do not care about anything past their current term. Now, I think anyone that argues that, come and meet me at the Stafford and we'll windmill on the cobbles. If someone can put me on their shoulders first, but yeah, I'll get my Scrappy Doo impression out. But
get your Stone Island on.
yeah, exactly. Moo. I, I, I think the argument that no, Rachel Reeves won't moot selling gold because that impacts the UK's future standings. I think that's a really poor argument because I don't think Labour give a shit, unfortunately. But that's just me.
Well, so
It's been a while since I've had a Rachel Reeves rant, to be honest.
yeah, it has, isn't it? Yeah. The triple R, the Rachel Reeves.
Yeah, God, I'm much better now.
So a little bit of quick maths has shown me the UK is around 300 tons of gold in government reserves. Turkey has around 600 to 700 tons. So Turkey does hold a lot more gold than the UK. So that's sort of like, delta of sort of selling down some of their gold relative to what we could do, I think is a valid point. Yeah. So I think gold basically has a smaller sort of strategic role here in the UK for our finances at a government level. Doesn't mean they can't do something, but I think the impact would be smaller than obviously what Turkey's doing.
I hope you're right and they don't. I just wouldn't be a bit surprised if they did.
Yeah. Two stories I wanted to finish on, just for something slightly different away from the Middle East. One was, I don't know if you saw it. I saw it. I think we'll get more and more traction. Yeah. Meta and Alphabet got fined $6.4 million in a trial in the US that basically a woman had said that she was addicted to social media when she was a youth and it's caused depression and self-harm and all these negative elements. And yeah, basically she won. And it has been seen as like a landmark case. And it's interesting because, yes, it came out sort of Wednesday after market close. And so obviously yesterday, Meta closed down, I think it was like 8%. But also you had like Reddit, which closed down like 10%. Snap also closed down about 10% as well. And so there's this thinking that there are like thousands. What it's like in the States. Everyone loves suing everybody.
Was it called a class action lawsuit? Is that the one?
Yeah, everyone loves going after them. And the concern is that if you've set the precedent now, in this case, is that actually, there are thousands or maybe even tens of thousands of cases ready to go.
Let's be honest, millions potentially.
Potentially millions, yeah.
And also, then same in Europe, right?
Well, yeah, that's the thing. Like, if given that this happened in the US, where you'd argue they're much more big tech friendly than in Europe, or, like in Australia, where they've banned social media for under 16s and all this type of jazz, that, I think actually it's a pretty big deal. I think you could see a lot of out of court settlements from the big tech firms in the coming year as basically everyone goes after them on the basis of this precedent that's been set this week.
Yeah, it's a difficult. The problem is, I think you've got to be very careful what choose your words, right? Choose your words. I think this is a bit silly that we're doing this. Everyone's like, people. You can walk away from your monitor. You can walk away from the screen. Anyone that's saying that this is, social media has destroyed my mental health and whatnot, I think you've got yourself to blame. And I hate to say that. And this is me that suffers from mental health issues, although mine are all related to other factors and fucking Twitter and fucking Facebook and whose cat is doing what today. Not that I've got some personal opinions on this, but I just think it's really poor form that this has been upheld. If you were like to, Meta and all this stuff, I think you've got to fight it because otherwise it's free for all. Everyone sues, a technical legal term here, boys, but sue the tits off you. And
Is that some technical jargon?
technical jargon. Yeah, sorry if it's a bit highbrow for me.
Yeah, just went over my head, that one.
Apologies. I'll send a glossary around later. The legal glossary, the Hansard, whatever it is. But yeah, I just think it's because it opens up the same things happen in Europe and in the Far East, everywhere. I think it's just a really dangerous precedent to set. And they surely can't just out of court settlement for everyone because now everyone would just go, oh, yeah, me too. I personally think they've got to fight it or come to some kind of arrangement with the government. I don't know what's going to happen, but yeah, as if they didn't have enough problems on their hands because obviously everyone's, all these big companies looking over their shoulders about the AI and who's going to kind of win that race as well. Are we going to start seeing people say, actually, do you know what? Me and being on ChatGPT 20 hours a day is also giving me poor mental health. Where do you stop? Is it going to impact Twitter as well? It's going to impact X.
I agree. Yeah. I think, but I definitely think we'll be talking about this story for. I think we've been talking about it for a long time.
People just need to man up or women, whatever. All genders are welcome.
And the last one, I don't know why. We're quickly moving on, unless Jay had any thoughts you want to shout out on that.
I don't think he wants to be associated with what I've said.
No, he doesn't.
It's probably next to not have any value to add.
He is making notes. I'm looking at what he's just wrote. Sue their tits off. Yes.
What does this mean?
Levels absurd.
The last one, which I don't know why I felt it, but I did. I probably saw it. Leo Rudvinsky, the very secretive beneficial owner of OnlyFans, died this week of cancer.
You're not meant to say it so joyfully.
Well, I'm saying it in a surprise tone.
Okay, sorry.
And it's his net worth was valued at 3.8 billion. I suppose you remember mentioning it whenever it was we spoke about this a while ago, where he basically paid himself 1.8 billion worth of dividends from the company that essentially is the most simple business model, but just printed cash. And yeah, I mean, it's it's one of those fleeting things that it's you can have pretty much all the money in the world, but unfortunately, if you get cancer or you get hit by a bus or whatever happens, yeah, that's it. So it's kind of so definitely work hard. Work hard, let's do podcasts, but make sure that you spend some of your money because
it's preferably in the UK economy.
Preferably to help counteract the fiscal deficit.
No, but on a very, very dark, somber note to end the podcast, I make you right. I think it just goes to show that you need to enjoy life, and I think as traders as well, especially when times are like this. I'm trying to bring this back to trading somehow. It's very easy to be kind of sucked into the kind of just staring at headlines, and most of them are negative at the moment. And and it's it does impact your mental health, and it does again, you could spend all your life worrying about what's going to happen in the markets, and you've got to remember your own health and your family's health and happiness, right? That's all that's important, really. Yeah, I didn't expect it to turn like this at the podcast.
I'm really looking to see what the AI summary is gonna put on this.
I'm gonna go stiff drink, I think.
Yeah.
Or some bleach. I don't know.
But anyway, yeah, that's basically it from me. We covered pretty much everything.
Perfect. Well, look, I hope you feel better soon. Me and Jesse, we're going to go and see our dear friend Conks that's sat patiently waiting for us around the corner. And
yes.
Listeners, whatever you're doing, well, we hope you've had a great week in markets and whatnot. Also, as usual, if you're not already following and subscribing to the Alpha Pick Substack, the AP Research Substacks, etc., do so. Content is phenomenal. I'm not just saying that because I'm hoping to get a beer out of Jesse, but I truly mean it. Yeah, whatever you're doing this weekend, have a great one, and we wish you a profitable week ahead, and we'll see you all next Friday.